What's up guys, today I'm going to show you how I play my 2022 model. So it's pretty easy. I'm looking for liquidity pools as the previous daily highs and lows, the Asian highs and lows, the London highs and lows, and then I look for a market structure shift on the M1 or the M5. Okay, so first off, what is a market structure shift? A market structure shift is when you create a break of structure to the downside, and when you create that break of structure to the downside, you create that bearish order block. Okay, so this is an area where sellers should step in again to create a new low. But if we disrespect that bearish order block, sorry, it turns into a bullish breaker. So we want to use this zone to enter and aim for liquidity above. Okay, so I'm going to show you 5 examples of how to play it, what liquidity pools to look at, and what time frame to look at your market structure shifts. So right here, let's go on that day, Friday, September 20th. So what I like doing when I trade the 2022 model is going on my H4 chart, because on my H4 chart I can locate the Asian highs and lows, the previous daily high and low, and the London super easily. So right here you can see on that candle started at 2 a.m. so that means that this is my London low here. So I mark out this low, and I also mark out the fair value gap just below it. I know I'm in a higher time frame, H4 fair value gap, H4 order block here, just right there with that wick, and also I have that liquidity pool, which is the London low. This is the most important thing. Then once I sweep that low here, I want to scale down to a 1 minute time frame to see what's the reaction. So you see right here, we tap that level and we immediately start to displace to the upside. The first possible entry would be inside of that breaker. Okay, if we break that, so we have, you see that structure, we have a low, a high, we break it, and then this small little up close candle is the order block on the 1 minute chart. If we are truly bearish, we should respect that order block to create a new low. But right here, if we shift above this order block here, then we will use this zone as an entry to target higher. This is basically the theory behind a breaker. So right here you see we disrespected that bearish order block, so we can have an entry inside of this zone. It's the most aggressive entry, but will yield the biggest return. High risk, high reward. Also, you can look at your 1, 2, and 3 minute time frames to also look at the same thing. So on the 3 minute, it will be a little bit better to scalp on the 3 minute chart for that model, because you will have less fake outs, so 3 to 5 minute, but on the 1 minute chart you'll have more opportunities but a little bit more fake outs. So right here you could enter here. In that case, never pulled back to that zone, so your only entry would be the 3 minute unicorn. This is where you have your unicorn model, and you don't expect price to dig into the fair value gap below. Why? Because you created that breaker, so that fair value gap shouldn't be touched. Okay, if we are truly bullish here and we shifted after the London low sweep, we should react to that zone. Stop loss below that order block's low, and I target, you can target either a 1-to-1, but in that scenario I like to target 1-to-2s, or just resting liquidity above like equal highs, or you can even go for the external highs here. But in that case I will just go for a 1-to-2. On the 3 minute you just closed, so you get picked up right here, and you can let it ride for a nice little 1-to-2 here, and you see, and you can get out here. It still goes and takes out more liquidity, but in that case you can just trail your stop. Let's say you hit this high, you trail your stop below lows, and you can definitely have a really big winner in that scenario. So this was the first scenario. So London low sweep, market structure shift on the 3 minute chart, bearish breaker turned into bearish order block, sorry, turned into a bullish breaker because we disrespected it, and then we longed for 1 to 2 stop loss below the lows here. That is the first scenario. Let's go and find another one here. I'm just gonna go here. The second one is right there. So this is a scenario where it's the previous daily high sweep. So if you go on the daily chart, you can see that this is the previous daily high. Okay, and if I go on my 4-hour chart, you can see we have a 4-hour gap above us and 4-hour order block again. So it's a really good area of interest to play my 2022 model off of. Right here, I'll go on the 1-minute chart, and I'll wait for price to tap me into that zone, and I'll wait for a shift in market structure at that moment. So right here, in this scenario, you see we created a low, a high, a low, we broke that high. So right now we need, if we were truly bullish, we should respect that order block and create a new high. But in that scenario, we want to disrespect that order block and play this bearish breaker as an entry for 1 to 2 to the downside. So right here, I'll wait for price to disrespect this order block and shift below this low. And you see, as soon as we shift below this low, where's going to be my entry inside that breaker, stop loss above the high, and I'll aim again for a nice little 1 to 2 here. So right here you also have a fair value gap, a super big fair value gap here. So you see you get picked up right there. At this gap, and then you let it ride for 1 to 2, and you see just right here, you would have taken out your profits just at that 1 to 2 mark, just right there. You see, it is a super simple model, but time-based liquidity is super strong. You want to look for reversals when you see weakness at those levels, and right here you see between 10 and 11 silver bullet hour, we open high into that previous daily high and we start shifting. This is a really good scenario to play a reversal off of. So that was the second scenario, previous daily high sweep, market structure shift on the 1 minute, enter on the breaker 1 to 2, and you take out profits. Again, here that level is, you see that low. If we go on the daily chart, this is what the previous daily low, then we sweep that previous daily low, kind of strong close below it though. So when we have strong closes below it, what I like doing is scaling down to my 5-minute time frame. 5-minute is the best when you are not really sure about if price really wants to displace or hold, retest and break the low again. So right there you see we really closed strongly below that previous daily low. We don't know if we could respect the previous sell side level to create a new low. So right here I'll wait on the 5-minute to have more confirmation, then I'll enter on the breaker and I'll aim for my fair value gaps above and my 1 to 2. So right here you see you have your shift in market structure. Like I said, in that case I would wait for a 5-minute market structure shift, so that would be inside of that breaker. I would not be tapped in yet, but this would be my entry, stop loss at the bodies here, and I would aim for a nice little 1 to 2 here. So you see you get tapped in here. Took some time, but you end up taking your profits here at this high, and also easily could have held your trade to let's say those equal highs above, and all this resting liquidity from London. Okay, I don't ask for more than 1 to 2s in that sort of scenario. If I see my previous daily low, my Asian low, my London low gets swept, and then I see a shift either on the 1 or the 5, then I just want my 1 to 2 and I'm out for the day. Don't need more than that, trust me. So that was the third scenario. This is previous daily low again. This is the best liquidity pool, previous daily lows and highs. If you see an immediate reaction after the sweep here, you really want to scale down to the lower time frames and look for a shift. So right here again, if you see, look at the daily chart, this is the previous daily high. You mark it out. Then you wait for price to tap that level and see if there's any weakness. So if price wants to displace down. So right here, you see price. This is the order block here on the 1 minute chart. If we are truly bullish, we should respect that order block to create a new high. Right there, we disrespected it and create that bearish breaker. So the real entry was definitely inside of this fair value gap. So this breaker here, stop loss above the high. You can aim for lower prices for 1 to 2. Or even put your stop loss at the previous buy side here. Right here you can see, as soon as you have that closure below that breaker, you want to start initiating shorts. So I'll wait for a pullback to tap me inside that breaker, and then I'll go short. So right here you see on that down close candle, it opened higher, it filled me in that breaker, so I'm in the shorts and waiting for that 1 to 2 to hit. And just right here, you hit your 1 to 2 after that previous daily high sweep. Again, it's not random that you're going to see reversals after rejection of these levels. These liquidity pools have such a big amount of liquidity that when you take them out and you start to show aggressiveness in the opposite direction, it will lead to a pullback to a discount or premium of the previous range. Okay, this is the exact model that I use. It's called the 2022 model, and it's really efficient. Okay, and let me go and find the next scenario. So that was again a previous daily high sweep into the hourly fair value gap, and then right here, what do we have? An Asian low sweep. That's perfect. I like that. So right here we have that Asian low sweep. What would be my breaker? It would be this little order block here. If we are truly bearish, we should hold this order block to create what? A new low here. We should create a new low. If we are bullish, then we should disrespect that bearish order block strongly. Then we want to wait for the pullback and aim for higher prices. So right here you see never ever closed above the wick here. What does that tell me? We are truly bearish here. So then we have that resweep, but keep in mind we still swept that previous Asian low here that you can see on the 4-hour chart, the daily opening at 6 p.m. We swept it, and then right now we're looking for higher prices. We're looking for price to displace and create that breaker so we can long from. So right here we have a bearish order block created. We want to see if we can shift above it. Right there we shifted above it. We can try to long from this level if we have the pullback. If not, we can use a 5-minute chart for the second entry, the second distribution. So that would be the first entry. Are we getting tapped in here? No. So then I can go on the 5-minute chart and try to look at the second scenario, so the second distribution, so the second pullback. So this would be my breaker on the 5, just right here between this zone here. So I would enter on the 5-minute breaker and long from there. Stop loss just below this candle here that created the gap. You'd never want to see those gaps get filled. Why? Because when you create that breaker, all those gap becomes breakaway gaps. So you want to you don't want them to pull back to. So right here, get filled, and you just wait for your price to get filled on the 1 to 2. And right here, again, you hit your 1 to 2. You could definitely aim for the opposite liquidity and always trim your stop loss at the previous low here. Again, 1 to 2 worked pretty well on that. And let's go on the last scenario. Again, another Asian low sweep you see here. So that was really the midnight low sweep, which is the overnight low. Where do I, this was literally today. So I go on the 4-hour chart, look at this low, nice, formed at 10 p.m. We have a daily for value gap below us, 4-hour for value gap below us, sorry. Then I know I can play a reversal off of that. I go on the 5-minute chart, 1-minute chart, sorry, and I wait for price to sweep that liquidity pool here. As soon as we swept it, then I look at any sort of confirmation that we have a breaker. In that scenario, let's say if ES swept this low and had SMT, this would have became the breaker, so this would have been the entry. Okay, when you have SMT, an order block is a breaker. In that scenario, you could enter on the pullback here if ES swept the low, but right here in that case, this is where you got your shift in market structure above this high, so this would become your breaker, and this is where you would go long from. Stop loss just below this candle's low here, and you would go for 1 to 2 again. So you get filled on the pullback, price starts to go up, and you see price hits your target pretty easily. So this is how I play my 2022 model. Hopefully this video helped you out. So I really look at rejections of previous daily highs and lows, Asian high and low, London high and low, and then I scale down to the 1 minute, 2 minute, 3 minute, and 5 minute time frame to look for my entries. If we displace below any of these liquidity pools, then I really rely on my 5 minute. If we respect the level perfectly, so let's say we sweep previous daily low perfectly and then we start to push up, then I can trust my 1 minute and I go for a 1 to 2. Pretty easy model. But if you are super loyal to these liquidity pools, you are not going to take a lot of losers, in my opinion. The losers come when you try to go for that 2022 model in the middle of a range, or you just try to scalp internal highs with that model, which is not the best scenario to do that, in my opinion. What you should do is wait for higher time frame liquidity pools, big liquidity pools that hold a lot of liquidity, and that you're sure that when you're going to sweep this high and low, there's a high probability of having a 50% retracement in the opposite range. So thank you guys so much. Hopefully this video helped you out, and I see you guys on the next one. Peace out.